Alrighty. Welcome everyone. Hey James, how are you? Yeah, big week ahead. Good morning, MM. Came back, have a great week ahead. Thanks buddy. Alrighty. So we don't have a whole lot on the agenda for news this week. So last week was a pretty busy week. We've got some items. Let me just have a look real quick. So we had, you guys can hear me all right, can't you?
Yep, good.
Yeah?
Yeah,
okay. Oh, good. Normally I can hear myself in the headphones, but I can't today. We had Bank of Japan speaking earlier this morning. Don't really think that had too much impact. And you can see we've got like some sporadic PMI news, Spanish, Italian, French, German. But these are final numbers. So it's just basically, are we confirming the number that we had before? And you can see that pretty much they usually do all line up. There's no real, not usually any big surprises here. So they're on Forex Factory, they're considered yellow folder, but we'll still be mindful. But they are like not meant to have too much of an impact. And you can see that we don't really have any big items today. We do have Aussie interest rates the next day, tomorrow, but all the rest of them aren't really too much to look forward to. On Financial Juice, they do consider the German PMI and we do need to consider that one because that's DAX. We are trading DAX, so let's see what if it does throw us any like some volatility, but I don't really think so too much. I think it'll just be usual volume. What's going on here? Yeah, in Korea, they just stopped. You weren't allowed to sell shorts. Hey, Tim. Hey, Glenn. Where's the chat? Here we go. Morning, Mo, Daniel, Ivan, Rob. How are you? Cool. Alrighty. So Bank of Japan will keep yield curve control, negative short-term rates intact until the sustained achievement 2% inflation is foreseen. So they're just holding on to their soft, very ultra easy monetary policy. So I think they're still gonna lean into yen sells. So we'll talk about that one later on. There'll be no ceasefire until hostages return. That's no new news. November 5, that was yesterday as well. Okay, alrighty. Let's have a look at the charts. German 40 here. Morning, Brett. Cool. All right, so what I'm thinking, we're in this period of time when we had all this negative news coming out of the US economically, and that's considered good news. So bad news is good news right now. But at some stage, bad news is going to become bad news. So like bad numbers, bad GDP, bad employment, bad PMI, all of this will eventually be bad news for the stock market. But right now, bad news is good news because all bad news coming out means that the Fed funds is likely closer to their terminal rate than not. So that's the market responding strongly. However, eventually people aren't going to stop spending, and that is going to affect purchasing power. So that will lead to when stocks are rising because revenue's up. When revenue starts to drop, stocks will start to fall a bit. So, but right now we'll just continue with that bad news is good news theme. I'm actually thinking sells though today. I'm thinking, I know this is kind of crazy, but with this huge bullish trend that we've got going since all of last week, is bullish. We need to come down at some stage to create that bottom wick for the weekly candle. and we are approaching on a higher time frame. Okay, we've had a lovely rally from these lows, pushing up, and now we're into this tricky area to deal with. So I am thinking that, well, I'm not going to marry this bias of sells. I could imagine that we do push up, but I do imagine that we're going to do a bit of a sweep down as well, before then maybe riding some of those buys. One second.
Hey guys, hey Hayden.
Hey mate, how are you?
Yeah, good.
Yes, we don't hear anything. You don't hear anything? Oh, that's why. That'll be why you don't hear anything. Because I was not on the stage. There we go. Now you should be able to hear stuff. My bad. Okay. Yeah, Friday's D1 is a doji, maybe sweep, and then attack later this week at the doji at the top. Yeah, we'll start. I'll go to the daily as well, but I am thinking because of this trend that we've got, and because we're inside of this area, I think that we could do a bit more of a pullback, sweep some liquidity, and then have that up move. But I would like to see price push up and then go down. So I'm really waiting to see what this next 15 minutes is going to close as. The daily, hey Al. The daily closed on Friday as a doji. This one here. Morning, Marin. This one here closes the doji, and we had a doji in this area as well. And we had, what happened was this candle pushed up into the wick, and then it closed pretty heavy down. So I'm wondering if we're going to do something, push up, and then start to push down, at least take out this doji low. I don't know if we're going to actually have the same response, because that stage they were flowing to safe. It was flight to safety. This time is the opposite. But I can imagine that we push down into this wick a bit deeper, grab that liquidity, and then we can start to rise. If we go to the 4 hour, we're retesting this order block area, which was far to the left. Okay, I've got some areas in here where there was liquidity left behind that I am hoping that we can push up in the next like 5 minutes or so, grab, and then start to reject and close bearish. On the 3 hour, don't really have much to show you. I'll just, for sake of time, we'll go to the 1 hour. To the 1 hour, I'm looking at. We'll talk about areas above price after, because now I'm just going to focus on what's going to happen with this open. But there are some zones I'm really got my eye on above price, and I've got some zones below price that I'm looking for. 30 minute. Not much to see. Just the same thing. Got a little Asian session. We haven't swept the low of Asian yet, and we've just been pushing up. So I'm thinking that's why we can come down at some stage. Mind you, last Monday, we didn't sweep the low. So last Monday here, we just pushed bullish all the way. Then the Tuesday as well, we just pushed bullish. We didn't actually sweep that Asian low. Wednesday we did. Thursday we didn't. Friday we did. So it's not a must that we have to sweep the low lately in this last week. But I do think we're going to push down, take out this little doji low at some stage today. Okay, on the 15 minute, not a whole lot to see. It's on the 20 minute. 20 minute is this where I'm thinking we could reject from. This area, little imbalance candle. Okay, that's present on the 10 minute as well. Same area. So I'd like to see price like push up into this area. It'd be nice if it could push up now and then start to reject and close back down. On the 15 minute, we've got this area that I'm looking at. This is the low from London session before New York kicked in last week, and that started with a bit of an imbalance as well. I'm just going to adjust this line because it was this one here had no wick, and then this one here had no wick, so I'm going to use the closing price. Okay. Now let's go to 5 minutes. 5 minute wasn't anything. The thing I want to look at is the 3 minutes. 3 minute, we've got no wick here from Euro. This is where we sort of kicked off things. So I can imagine that this is going to be swept at some stage. At least this line. And then once we're getting down there, we can start going to these lower points of interest. And then the other area I've got in mind is for potentially the high of the next 30-minute candle, or this current 30-minute candle, is this little zone across here. I think this could pose a little bit of a problem, because this was a little bit of a liquidity grab. This wick grabbed liquidity. This one wicked up into it, and then we just went down and we broke structure and we just continued down. So I can imagine at some stage inside, like we've got a little bit of inside 3-minute structure, okay, manipulation, 3-minute liquidity grab, and then we've got this imbalance candle. So I'm looking for rejections from one of these areas. So I don't really want to take breakout long. As much as this could work out, I don't really want to take that breakout long because I find this area could push price down. So I'd rather be looking for longs from lower, or looking for actually to reject from here and take sells just to get down to these price points again before we start pushing up. So on the 30-minute, I'm really hoping that this 30-minute candle can close bearish, but it's looking unlikely. It's looking unlikely. Yeah. So, but be careful with any breakout longs. I find look for like your 20. Look, if this candle's closing bullish, London a lot of the time will go that candle for like 20-30 pips that way. But then you can have those rejections. Okay, so there's nothing stopping the next London open candle from doing something like this. There's nothing stopping it doing something like that. So careful on the breakouts if we do get that long wick back down before we get that great move up again. Before then maybe pushing down. So just be careful of that whipsaw, okay? We've got 8 minutes. Let me just check if I need to do anything.
Haydos?
Yeah, mate.
So this wick right here, this one.
Yep.
On the 5 minute. Can you go to the 5 minute? If you don't mind. Yeah, you can see that we have two nice dojis right there. So it's not interesting enough for you to highlight these two right here, or you're more focused on that zone that you explained?
No, that looks good as well. Little support created.
Yeah.
Over here. Yeah, that looks good. Let's see. I didn't pick it up straight away, so we'll call it Mo Zone. Let's see how that one just extended over. See this one, how it reacts. But that looks good. I liked this structure. This gave a really nice opportunity on the weekend. That we covered on the weekend. I went to push up, came back, and went to the top, and then we had that resistance created, rejection, HCS, whatever you can call it. Whatever, head and shoulder. But that was a nice little move down. So yeah, let's see, Let's see what this zone. So I would love to see that liquidity grab and then start breaking down. Is Deb in here? She's not here. What do your color zones mean? This here is an order block. This blue one. Sometimes it changes the color though. These little gray areas are the like support resistance zones, when it's like not really a defined area. It's just more like space in between bodies, the wicks. This green and purple, this is a higher time frame liquidity wick, just the wick. So this is giving me the 50% of it, the top of the wick, like the open of the candle, and then the low of the candle. The thicker black lines, like these ones, these are my monthly close levels. All the other zones are labeled. The red ones, support resistance as well. Just trying to define some things a little bit more. Okay, looking over reacting off Mo zone. We'll go all chart view. So I got 30-minute bottom left, 15-minute top left, 5-minute top right, 3-minute bottom right. Friday was pretty slow as well, so let's not get too carried away in this range. This is a pretty nasty little area. Hey Tom. Okay, so no top wick on this 3-minute. At the moment, I don't want to counter the 30-minute candle. The breakouts are... Just make sure if you're taking the breakout. I don't think I'm going to take this breakout. I don't like how we're pushed up so much. I would rather be looking for a bit of a pullback and then go up. Let me check the 1 hour. Yeah, be careful of this rejection from Mozone. Normally you can really trust this 30-minute candle. Normally this one is really trustworthy. But there are times that it's the occasion that it's not. I feel like this could be one of those. So So if we're wicking up or rejecting, and then if we're doing like on this candle, if it pushes up, rejects, pushes up, starts reject again, then I would take that sell probably down to maybe like 20-30 pips down to like that towards the Asian low. But I want to see it do up, come down, reject as high again, basically close under this little support, and then I think we can fill some of these clean candles, come back down to this area. The 1 minute would be looking pretty interesting right now. Okay, got 20 seconds till they open. Okay, there's the open. I'm not in the trade yet. Seeing if this does a little liquidity grab. And if it starts to flip, come back up and then break its low the second time, then I might get into a sell. Alternately, if we can drive up, it will take a little bit of time of waiting, but if we can start to form a resistance, multiple 3-minute candles, like two 3-minute candles, closing bearish, and then starting to break its low, then I'll look to go down as well from one of these areas. Probably, preferably, it's going to be this solid little thin black line, because this will be that 10-20 minute imbalance. Now the breakouts, if you went with the breakout, it was good for 20 pips, nearly 20 pips, which is not bad for that breakout. But then this is what you got to be careful of, the flip. Okay, so if it can push up again and then start to show that resistance, then I'll probably take that sell. But right now I can do the bit of the wick fill. I'm going to target probably this area. Just need to close. We'll be in the clear once we can close underneath this bit. So even just waiting for it to close underneath here might be a good option.
So taking the trade right now with positive is not reasonable in your opinion, right? Breaking the previous 15 minutes that just closed as a doji, like the break of
impulsively.
yeah.
I think waiting for it to close would be nicer on here.
Okay.
Be the same area, and you're going to wait a minute and 30. But let's see what it does in the next minute.
Just say I'm digging the music tonight, dude.
You're liking it, eh? Okay, 45 seconds. Oh, sorry, J-Blocks. The yellows, the pre-London. The blue's the Asian session. Green is the New York session. London's the standalone London part. All right, targeting down here. Morning, George. Should break through this little level. I am in this trade.
So you took it at the break or waiting for that 1 minute?
I took it before when it was rejecting, when it came up. So when it went up, came down, and then when it went up again, that was when I had to get in then. When it was rejecting this area again.
Yeah.
But break, I don't like to take in the break of the low. Because I feel like if I'm anticipating the break of the low, then I want to trust my anticipation to get in earlier, then take it here. Because too many times it can... Once we're like rejecting this area a second time and pushing down, we're definitely going to take out some sort of support. But I don't want it to reject off of that support. Especially when I'm trading on this account, I need to be a bit more aggressive, because if I take the break of the low, I'm going to get 3 pips slippage. I'm going to probably get a bad entry and 3 pips spread on top of that. Well, I fully expect it would come up to this area again to retest it. Like even when I tried to get in, when it was rejecting here, my entry was here. Okay, I just seen on the terminal that this wick is not here on my terminal. Different broker though, of course. It's the Blue Guardian 8 cap, but that wick's like that. So it just bounced off that no wick, that little momentarily, just went, popped up. Oh, Ivan, you're in this one? Very good. So I was taking the low of the 30-minute as well. If we can just get underneath there. If we can just close underneath there, that'd be nice. But it'd probably pull back for everyone else. The 30 minutes can be problematic because the 1 hour still, like look at the 1 hour. 1 hour still nice and healthy and bullish, and this could just be a pullback. I won't let it become a losing trade, that's for sure. At max, wasn't quite at the area would one want to take anything, but I was up like 18 pips from low to here was 18, minus the spread, of course. Because this is the area I was actually thinking. Because I want to look for longs, but I don't trust the longs. Oh, sorry, that was white. I don't trust the longs inside of this area just yet. So from top to bottom, it's 36 for this opening 15-minute candle, 36 pip range. Oh, it's okay, yeah, it's not bad. I might prefer buying. Oh, it's gonna break even me. Far out, man. Mike got stopped out. So crazy the spread on this. That here, even though my entry is here, because I moved to break even, that there took me out. Spread widened. must. Oh, I don't know if it did, but paying 3.2 pips spread on German 40 for this one, or an 8 cap. You got in long 190. Oh, the 20 EMA. Yeah, don't let it. Like if you're taking these sells, don't let it like. Oh, because we are such a bullish trend. Definitely don't let it become a losing trade. That push down it wasn't quite enough to secure anything. Would have liked to have secured. But we know that the first trades in the first 10-20 minutes, you gotta secure at like 20 odd pips or 30 odd pips. So I was at 18, so and then this thing came up to get me. I thought I'd actually survive that because entry was here. Ah, you look at this. Mo, did you get in on the retest?
Yeah, I was about to slip right.
I slipped.
Like
yeah.
Yeah.
Oh man. Morning, Hannah.
Uh,
5 minutes close, nice. We've got the little doji, taking the high of the doji now. Now we just if we can close underneath this doji, then I think we've got another 10-15 pips to the downside, easy pips. But if we don't close underneath that doji, then this is potentially a rejection wick. This is a rejection wick. So right now you've got a little range of forming. So we want to see something close outside of it. Daniel, all right, mate. Damn, if you, yeah, you can check the. Oh, it's probably not on there. Anyway, that's. If you YouTube, all the information's on my YouTube. You can follow those links and get the Discord's there. That's free for everyone. pop it up later on. It's a squash price action. ACG is very different to TradingView. The retest of ACG 5-minute liquidity candle is perfect. Yeah, the wait, the retest of ACG on 5-minute liquidity from the downside. This one here. Oh, sorry, 5-minute. You talking about the dual doji, Joe? From upside. Is this a 5-minute candle, is it? 5-minute liquidity candle. Let me check 8 cap.
Sorry, just in the last 3 candles. See where Mo's zone is. See
Oh,
that
up here.
5-minute bearish liquidity candle.
This one here.
On on ACG it retested that perfectly. It touched it, but I just saw it there, and yours didn't. There's a gap. TradingView. It's touching it now again.
Yeah, Pepperstone versus the different brokers.
Yeah.
All right, I wonder if we're gonna. Let's see what it does here. I really don't want to. I can get around the buys now because we've done the pullback. I think this was very important to have happened. That's why I didn't trust the breakout initially, because of what I said. Like I already thought we could have that wick down that goes bullish, but we've still got to, like, this has been a pain. This 15,220 area. You can see like what it all did all last Friday. Held resistance in Asian session. Liquidity grab fell down. New York pushed up into this area and then got rejected. Then we had that rejection from here again, from basically that 3-minute liquidity grab that I had my eye on initially. It pushed down. I didn't see any reason here to get into longs at this point. From my perspective, underneath here is where I'm targeting. But right now, again, we're stuck in this area. So let's just see. Maybe it's done the perfect 5-minute liquidity retest.
Got to close below that level though.
It's got to close below here. Yeah, that's right. So I don't feel too bad that I got stopped out. Well, it moved so quick that this candle here closed out my trade, got the move to break even, but it actually closed out at 1.5 pips profit because of the spread must have popped up and it come down so quickly. But this one here definitely would have taken me out anyway. So at break even. So I don't feel too bad about it, but still.
Yeah.
Now we push down. Bloody hell. So the anticipation entry sometimes is just not worth it. Because like once I get stopped out, well, once that trade closes, I find it quite difficult to re-enter immediately. And if I just waited for this candle to have closed and then waited for the retest, I wouldn't have been so worried about, like, I don't have that one trade closing and the next trade opening again issue. But the idea looks pretty lovely on here now.
I think I form a proper like HCF.
Yeah, that one has done it now.
5 minute has it.
Yeah, Manny's in. Oh yeah, got it. Oh, so you did. Oh, you entered twice because the idea made sense for you. So took on the retest, came up, and got in again.
Yeah, wow. Good
Nice
job.
one, Manny. That's awesome. Oh, now look at it. Yeah. Secure down here, guys, at this 15,186.
Yeah, that's the fun.
Took the short as the current M5 flip bearish. Test the new platform out. Oh yeah, good one. Good one, Alan. This is on the prop account as well. Is it, or is it on the demo? Dave's in short. Congrats. On the demo, just getting used to the magic keys. Yep. Lead left hand. Lead left hand. What point will your bias be bullish? Oh, I wanted to do a liquidity grab from Probably, I'd like to see the Asian low being swept, and then we start pushing back up again. So what I wanted to see is for me to go bullish, I want to see something like this, and going down and sweeping liquidity from a session low, and then really closing back above here again. Then I can say we're going back up to the London high. But this is going to have to play out a bit. I definitely prefer the sells today rejecting from this area, because I really think all of last week bad news was good news, and this week bad news is probably going to be bad news. Joe entered twice as well, closed full position, re-entered. Nice one. And
This
closed
area
full
here.
position just now. Yeah, that area was key.
30-minute.
I'm sorry, I don't have any places to show.
Siri, piss off. What are you doing?
I'm giving tips on easy
Oh,
things
now's
you
my
can
one
do
going
to
across.
help the planet.
Oh,
No.
Stay in your lane.
Haydos?
Mm-hmm.
On the 15-minute, let me.
Oh, 1 second, Mo. Sorry. As much like this is the imbalance on the 3-minute, but on the 5-minute, this is a liquidity candle. So the 50% of that liquidity candle, you can have some reactions. That's what I use this one for. So you can see, just put it on the wick, the GAN box on the wick. Okay, so from open of the candle to the bottom to the wick, the 50% can give you problems, because that is a liquidity candle still. Go ahead, Mo.
Yeah.
So the 15-minute, we had a. Let me edit it.
Do you want me to make this bigger?
Mm,
I'll make it bigger, because I think on Trading Nut stream, they've got the banner which covers a lot of the top of the screen.
yeah. So you can see that this is a clear FU candle.
Yep.
And as you always say, we need to highlight the wick, because that's where the most probable retest is gonna come from, right?
Yeah, this is the wick is the buy to sell. So where the buy to sell occurred, that could be the wick is the problem.
Yeah, but as what I saw from you, and actually sometimes you might go even for shorts even before that retest to the wick. Sometimes you say that price may just retest the body of the candle instead of going all the way to the wick, right?
Yeah.
Or is it mandatory for us to wait for that retest to the wick?
I prefer the wick. Actually, he's done more back testing where he's more confident with the body as well in scenarios. Well, I definitely
on the
prefer
1
the
minute,
wick.
Can you go down to the 1 minute?
Retested the body.
Sorry, 1 sec. What was that? Mo, you're really quiet.
Can you hear me?
Yeah. Go on.
So going, as I said, going to the 1 minute.
Yep.
So I think where's exactly that you got stopped out?
This one here. This because of the spread of mine on this broker is like it'll flick up to 3.2. So my entry was like here, and then this one must have on the 8 cap it closed, but like even the lines like this, the trade. So like it must have wicked up, triggered the break even, but it wicked down and actually closed it out here.
Yeah, because I gave it another try after this 1 minute close. So when this 1 minute open, what do you think about this sort of entries? Like when we have 1 minute resistance without waiting for price to go to the full retest of the wick, because that's what happened.
On the 1 minute, it's a bit sketchy. The time frame is very low, but not when you've got no top wick, it'll take that out first.
Oh, okay.
Yeah, it's much better for entries when, like, for a resistance candle, if the resistance candle's got a top wick on it.
Yeah, so it's better to, if it was a proper entry, we had to, on this case, to put the stop loss over here to
Yeah,
be
but put it above
much
wicks
more
for
safer.
sure.
Yeah.
Stop loss always goes above wicks.
Yeah. Okay. Thank you.
But the 1 minute is, you can see there's so many no wick candles. So I'd definitely prefer it. Like, see how this 3 minutes got no top wick? So definitely put it above a wick, because the wick's the liquidity grab. So what you put your stop losses above liquidity grabs. Otherwise it will grab your liquidity. Going on to what you're saying about the body as well, that for me personally, I find it more reliable to take a trade off of the wick. But then if price, say this candle here closes and then this one here closes as well, and then price actually moves down, then I think if it comes back up, it doesn't need to retest this wick. It can retest this whole body area. So that's from my understanding or my beliefs. I'd prefer, like, in that case, once price actually significantly moves down, then we may not get that retest of the wick, but we get a retest of the candle's wick and body. You think Aussie gonna increase rates? I think they have to. I think if Michelle Bullock's serious about inflation, she has to. Retail sales are up. Employment will be rising as well because of the early hires for the festive season. Inflation hasn't moved for 4 months. Energy is getting more expensive again. So I think she has to. What the market did for last week was quite nice, because an easy way to trade the news is just trading like the week before the news, because we know there's the pricing in. So once it gets to the Aussie interest rates day, which is Tuesday, which is tomorrow. Oh gosh, computer gets so slow when I run all these things. But like, so say, because the big four banks, I'll quickly go over to AUD, JPY. That was the one I was looking at last week. So if you're looking at them, so the big four banks, CBA, NAB, ANZ, Westpac, they all forecasted that rates are going to go up to 4.35% from 4.1. Just the rumor alone, a week before or 10 days before the news, will have them pricing in the potential for 4.35. And then when it gets to the day of the rates, when they lift the rates, price will go up momentarily and then come down, and then start building back up again. But it won't quite be like, it'll be, the odds are, I think they put in it, most people think it's going to hike, so price would sit like here. If it was more of a 50-50% whether they're going to hike or not, price will probably settle somewhere in between. So if they hike, they'll have heaps of room to go up. If they if they hold, price will be able to come down. But that's if there's like a 50-50 odds. I think the odds of them hiking are far higher. So price is going to be closer to the rate, the expected move. Which city? What's that mean? Oh, sorry, you're talking about Marion trying to sell the house. Yeah, gotcha. She's in Queensland. Those sales are looking good. So retested see how like what happens at the retest. So you can really follow price action. So lovely to see. Price. I'll go all chart view. So 30 minute. I'll fix that up. 15. So see where price had a reaction from that liquidity candle. Price pushed back up, retested this liquidity wick again, and we're just making these lower highs. So the structure's firmly to the downside. So this is really good for if we're going to go bullish later on. What we want to see is price continue coming down, and then start like we want to see. This is an idea for New York, is that you want to see London do a pullback at some stage, and then start driving down, like a pullback to the 50% or something like that of the current range at the time, and then start to drive down into a lovely point of interest or zone of interest to the downside. Gosh, I can barely write at the moment. And then you set an alert across here for New York, and once New York closes above that area again, then we can target 30-40 pips to the top side. All right. Your bias today was bearish because price swept the Asian high first, but there was no strong bearish displacement after the high test bar, so you didn't enter from lead left hand. Yeah, it was a tricky one to have entered up here. You really would have had to have trusted it, and I didn't, because of the trend going so bullish. I really didn't trust the price action until we closed back down, came back up a little bit, and then started pushing down again. But once we closed below, then it made sense to take out this liquidity down here. It was just, this is annoying. The retest is annoying. Cool. All right, trading up, guys. Well, I'm going to end the stream on that one. I'm going to continue on my channel for longer. But I need to close one of these streams down because you can see my computer's just struggling. Okay, so that is on here. Okay, into the search YouTube for Haydos FX. Okay, this is what we do every morning. I'm going to continue on that. I'm going to close this one down. The idea was there for those sells, just pretty hard one to have taken because the range is very small. You've got like 20 odd pips here, so much easier if you can find a 40 pip range and then be able to, you get 20 pips easy then, where this 20 pips felt like a bit of, like it was quite up and down, up and down, up and down. We didn't really have clean traffic down over here. All right, so I'll see you guys on my channel, Trading Nut, and I'll end it there. So see you tomorrow. Cool. All right, so it's just our channel now, so that should speed the things up. We'll continue looking. I'm gonna go get a coffee in a tick, so that, you know, normally when we get that coffee, we get the reversal happening. So we'll plan like potentially a 20 pip counter. And then we'll go over the ideas for later on. So I've got a few really nice ideas for my group, for what I think we can trade if you're going to trade later on in the day. Some really high probability areas that if we get to them, I think you can get a 20-30 pips trade pretty comfortably. Let me just close down this page. Cool. Is anyone holding the sell still?
Yeah, I still am.
Have you taken anything?
No, not yet. I just had to run down to the gym to get one of my boys, so I've come back and sitting at 1.8.
Very good. 1.8%. I haven't taken 3/4 off. That's good, mate. Does everyone understand the trade?
Yeah.
Anyone?
I'm wondering later on.
Yeah.
If it's going to drop down far enough. Where is it? Where's my line? Come down to 150.
Mm-hmm. That's my
bounce
alert.
from there.
Yeah.
Yeah, bounce from there.
Yeah. We'll cover the ideas, all the ideas for the rest of the day. when it's just after 9 o'clock when it's just us. But the areas for people to like do put alerts in and keep track of these areas. This one here is a bit of a stretch. So this one's kind of like planning for maybe this could be the high of the week, maybe Wednesday or Thursday. But keep an eye on. Let me just change the color, make it stand out. So this, make it thicker. So this area, this area, this area, that's where you're pointing out, Simon.
Yeah.
And this area. Okay. Now these are going to be some crucial areas. So that's just because everyone's got different broker feeds. So I won't give price necessarily. You can see the price on the screen, but some brokers are going to be like the price action is exactly the same, but the price it's at might be up to 15 pips different or 20 pips different. So just marry up the levels. So put an alert there and watch. Tom, you missed the lead in. Cool. I'll cover that again. Is anyone else not sure about the idea for this trade or the idea for this move? Be honest, guys. It's absolutely fine. I just want to test out understanding or the idea just to see if you're comprehending. Like, the more you watch my style, I'm sure you guys are getting used to it. Yeah, for the new people, this is why I want you guys just to make sure that you don't feel scared about saying you're not sure. That's the main thing. Okay, because I'm going to assume that if no one said anything, that you're all gravy with it. So normally this is your reference candle, isn't it? This one here that you can trust. And we know if you've done testing or back testing and testing how often this candle can dictate where the initial 10-20 minutes of volume comes from for London session, we know this is that friend of yours that you can trust their advice most of the time. They usually give pretty good advice, and that's your friend right there. But sometimes they do get it wrong as well, and sometimes this candle doesn't quite see where there's a zone, because this candle can't tell there's a zone. This is where you can then say, well, do I have a zone directly in front of it, this candle? Because this candle, this friend here is telling you we're good for upside. And usually, even when this candle closes bearish, we still, most of the time, will get that upside for 20 pips at this London Open. And it did. This was a good move. We pushed up, or 18 pips. That's not bad. But with a little bit extra zone analysis, sometimes this is the liquidity grab, and we just don't have enough room for that up move to take longs. And that was the idea here, that I thought it would go long, so I didn't enter sells immediately. I needed it to go up first to grab that liquidity before it can start to push down. Now, where it could go up, like this zone is a pain in the bum, right? Because this order block here, I think it's 45-minute chart. Back over to the left. This was that structure that we had flagged from last week. Okay, price, nice clean candle, impulsive candle, breaks into a zone. Now we push up, we create a resistance, we come down, we create a support, we push up, we create a resistance, and then we leave that area nice and strong. So this up, down has created a lot of orders inside of this area, and it's given us a nice clear resistance and support. And we can extend that zone to the right now and say this is just your order block. And when you, there are times, we've got markets will move with seasonality, and different times of year, we don't really know which times, but sometimes this kind of structure isn't as reliable as other times in the year. So we need to just bear in mind and adapt, be fluid with when structure's holding really nicely and when structure's not holding nicely. And right now, structure's holding really nicely. Okay, so that structure, this is structure on a different time frame. So I believe this would be like the 1 hour, I think, because it doesn't really quite, it gives you a lot of fake outs on this time frame. for this particular area, but on a different time frame, 30 minutes or maybe the 1 hour, this looks nice and condensed like this a little bit. Okay, so once price comes up to it, we form a resistance and we create that rejection, okay, and we push down. We grab liquidity. Then in New York session, we break up into the structure. Once we close inside of it, it's mandatory to go to the top, but then it rejects again and has a pretty healthy rejection. So New York session was more or less bearish on Friday. Now, trading into this area again can be quite tricky. So pushing up into this zone, you'd want to see, if you want to trade inside of this zone going long, it's better to wait for something just to close inside of here. Once something closes inside of here, then we can start to build to go back to the top and retest these highs. If it just rejects, which is what these candles are doing, it's much easier to go for the downside because we've got so much liquidity left below price for the market to go to. So for any up move, you generally want to see a liquidity grab. Okay, so if we try combine this with what happened on Monday here, where we had this Asian session and we were pushing bullish. Just remember that this is difference in daylight savings as well. But we pushed really rapidly up, okay? And we didn't take out the Asian low. The difference between this move up being so just bullish out the blocks is because price was so deep. Price has already come down so much, and we're at these higher time frame, heavy rejection areas. So it's already grabbed liquidity from the downside. So it's much easier for those moves to just go bullish, bullish, bullish. But now after a sustained week of bullishness, we're not going to get that same sort of reactions without doing a sweep of some liquidity area underneath. So we just had to play that bias that yes, the 30-minute candle, that 30-minute candle can suggest go long, but just be careful because this time, this is that probability where let's say we've got like a 70% probability of following this candle. The other 30% is you can usually pick maybe let's say 20% of those, like 2/3 of those 30%. It's quite clear when it's not going to work because you've got a resistance or zone right in front of it, and this is one of those times. And then the other 10% just there's no tell, and I'll get it completely wrong. Now, where could it do the liquidity grab if it pushes up to it? Well, this is the area that the one I really liked was on the 3-minute, combining these two candles, because this is a liquidity candle. Okay, let me just zoom in on that. So this, why is it a liquidity candle? Price pushed back up, wicked higher than the candle to the left, rejected it, closed lower. That's a liquidity wick. This one retests that wick, and then we push down very, very quickly, and we break structure, and then we just continue that downward momentum. Now, something new that I've picked up from just our back testing and like actually as well, we've been pointing this out, is combining the candles. Combine this candle and this move down. So, because normally I'd say I'd be put my level here, and then this time I was like, well, this time I'm going to trust this because this was nice, efficient movement. This candle's low and this candle's high. Quite looks like quite trustworthy on higher time frames, like daily on gold, to trust these kind of levels. But that was where I put that zone, that line, matching the high, the low, and the high. Now I was looking for price to come up near that area. Remember, this is low time frame as well, so I was looking for it to come up towards that area, and then I just wanted to see it reject. I didn't trust it enough to enter sell right there, but once price pushed down and we saw this candle flip and break its low, then come back up to this area again, and then start to flip again. That to me, once it does that, comes down, comes up, and then starts to flip again, I'm happy to take that as a sell, and this is a liquidity grab. Better confirmations once we can close below support. And I was hoping we didn't get that retest, but it did.
That same zone, Hayden, is a fair value gap on the 30.
Yeah, probably fair. Right here, this little area.
It just filled that efficiency and
Mm-hmm.
cleaned it up.
Yeah. Be careful here as well. Simon, did you secure it at Asian low? See here? Maybe it's ducked off again. Asian low is going to give you issues. So there was a bit to piece together in this one. It's like it does seem a lot easier when we get a 30-minute candle with no zones in front of it and just go with that direction. But then when you're trying to piece together the times not to trust it and then see like where the liquidity grab, there is definitely a bit more involved. But it was a lovely move, you know. It was a nice little, like, remember what I was saying as well at the start, that we could get, let's see how this hour candle closes. But I was worried that even for that long move, we could get a candle, an hour candle, that just sweeps all the liquidity from downside and then starts pushing bullish. So the idea is if this is rejecting from here and now we're closing above here, then I'm happy to miss a lot of this move, but then wait for this one to then go up. But let's see, we've got we're 8:45 minutes. So we've got 15 minutes till the candle hour closes. If we want a reversal, this is the time I've got to go for a coffee and trigger that reversal.
That's good for at least 30 pips.
Yeah, that's the 30 pip signal.
Expensive coffee.
All right, I'm going to do that now. I'm going to go get that coffee. Go check on the baby as well. I'll be back in 5 minutes. Okay. So we did some see like how is Bill here? Bill, you are here. That testing, how long was that for? How many candles on the range? If we look at this one. So we pulled some data from MetaTrader with the sessions. So with adjusting for daylight savings and everything. So we've got, this was the typical range for German 40. Okay, so you can see up here that most of the time, London session, the range distribution is the median. Change the color here. The median is 123 pips in a London session. There's quite a lot of sessions here. I'm not sure how many years of data this pulled, but 123 pips is the average range. Less than 5% of the time we go 55. So, and then more most of the top 5% was greater than 283 pips. The bottom 5% was under 55 pips. So we can see like, clearly the 90% is going to be somewhere between 55 and 283 pips. So good volume majority of the time. Even 55 pips for sessions, compared to currency, that's all right. But the average, by far the average, the distribution is going to be somewhere around 90, 100, 110, 123. Okay, so we can pretty much pick most time is going to be somewhere between 100, 140 pips in a session. And we're just trying to grab 50 of that. Compare that with New York. New York is good as well for German 40. On average, we move 122 pips. Pre-London, on average, is 50 pips. Asian session, 66 pips. So we can tell the two different sessions that we want, London and New York. New York is defined as all of New York, as in from as soon as New York opens. London session is defined as from London open until New York session starts. So it's only a 5-hour window here. Okay, most of the time. You compare to something like gold. This is why I don't trade gold in London, is because gold will move on average at 160 pips in the New York session. London session, 85 pips. Asian session, 77 pips. So that's quite surprising that that Asian session and London session are almost the same for gold. Then you got pre-London, which is 52 pips on the average. Or the middle ground. So New York's far better for gold. Whereas London session, I find that London for gold is very choppy, very rangy. So don't particularly like trading gold London time. Much prefer just to leave it for New York.
It might be moving.
Yeah, I'm keeping my eye on it. Now the other thing to quickly look at, very quickly, is this one. If we can, it's pretty small to see, but basically it's talking about how much it moves on the open. This is the open. The open. This is after the plus 1 hour, plus 2, plus 3, plus 4, plus 5 until New York starts. And you can see like the open, 78 pips on average in the opening hour, and then it just goes down, down, down until New York starts. Okay. So this is why it's like when we get to after this first couple of hours, then it's usually better off to just set some alerts. Okay, so yeah, Mo?
Where's those charts that you just pulled up?
We just pulled it from the session indicator for that we got for that we built.
Mm-hmm.
Bill pulled it from it. I'll post it. We're just trying to work out. I was asking them some questions, and we're just trying to break down like the volume, typical volume, trying to find correlations. So I'll post that if he's happy with that, with the data quality. I'll post it in the general.
Okay.
Let's see if we can get back to 50%. What I'd love to see is price pull back to like say somewhere like here or something, and then we continue breaking and making a new lower low. What I'll do then is for that'll give me an idea straight away for New York session. Well, we're swept Asian low now. Did you take this, Glenn? I saw there's a little...
Yeah, I'm in and out already, mate.
It's only moved 12 pips.
I would anticipate a reaction from this level here and pull back down. If it's going to reverse, it'll come back down, retest, and then push up.
Yeah, I'm thinking it's going to keep on going down.
Yeah, I think you're right too. We did have a trend. There was a trend line running down like so, and we've broken it. And when this usually happens, it'll come down to an area somewhere around about here before it might retest the 50%, which would be the Asian high. But that's still a good 30 pip range there.
So I'm going to see if we can get a resistance to get this part of the move, and then whether it's going to reject from here and go up again. We're going to see if we can try scalp a little move. Just need to see some price round to come back down.
This level here has been quite influential. If you zoom out for quite a while, you'll see it's a lot of reactions through there. You've got 50%, so you've got, it's not exact, but you got 50% of this, 50% of that. Clean candle there. You've got structure through the middle of this. Like this, it's a pretty good zone.
Mm-hmm. I made the German 40 the main instrument to trade. Yeah, that's it, Daniel. Definitely. For London Open.
Too.
London Open, definitely trade this. So got my eye on this area to see if we can reject from. There was an H4 fair value gap at 15,108. I was thinking price could retest that and maybe ready for longs in New York session. Yeah, that'd be ideal. That'd be absolutely ideal. Because then you've got from, this would be London high. And then if we get down to that 15,108 down here, which would be hopefully that'll be a London low. That'll be 118 pips. 128 pips, sorry. 128 pips, which is right on average with the London, typical London range. Then what will happen often is New York session if New York session goes down, they won't sell the low. So what you can, either way, even if you think New York session is going to be bearish, they won't sell the low. So they'll sweep the low, and then you'll still find longs regardless. So if you're looking for longs in New York session and London does get down that far, it doesn't matter if New York session is going to be bearish or bullish. There will still be some longs. It's just depends on whether you think those longs are going to be with the higher time frame trend to keep on going up, or it's just a pullback for New York before it continues going down. But either way, there'll be that move. And it would be nice if it's like sweeps the London low and gives you that rejection and then starts making its way back down. And you can take advantage of that move.
Right.
Yeah, I didn't want to take the first reaction.
No, I didn't want that one.
I wanted to see it come up to this area and then do that. But this is good, you know. This is good because even if this reaction can hold and we can actually break a low, then this is a strong high. And then you can say for New York session, if we're unsure about how low it goes or whatever, once we're closing above here, then you've got an easy move at least to the top here. With New York volume closing above this high, this is a easy trade then. But you don't know when it's going to happen, so you put an alert in, and then just walk away from the charts. Wait for that alert to go off. Just make sure you're got ability to like on TradingView, it comes up on my phone or sends me an email when that alert goes off. If I set it on MetaTrader, it'll just ring a bell. If it rings a bell, I might not hear it. Cool. Alrighty. Did anyone take that sell?
No, I chickened out.
Yes, I took it.
You took it, Samir? Nice one, mate. The high is the 200 EMA on them 5. Is it now? Oh, look at that. 200 EMA. If we can close underneath here. Come on, man. If we can close underneath this. Oh, remember that other thing that was like, we're saying if we can close under here. As soon as we close under here, can look for that continuation to go down. Forgot about that idea. But now if we close under here, then we've got downside. Yeah, we've got to, if we break it, it's not going to be the HCS. I'm not going to take this on the prop account. My entry will be shocking. I'm only trying to get 20 pips. Take that on the prop account, and it will return to 5 pip profit. Yeah, breaking that down to this area, at least this green line, this will be a sweep of your New York low. Just make sure it breaks it first. And try again on the wick if you can. Don't take the breakout. The range is very small though, guys. The range is, because you do have a rejection point right here, but I'd say the New York low is where its target is. Oh, not having it just yet. All right, guys. Well, YouTube guys, so we're at the end of the stream. Zoom people, my people, stay on. We'll go with other ideas now. All right, guys. Well, a fairly nice session. With only small range though. For this initial hour and a half, I only moved 60 pips, but there were some lovely areas to trade. Look at Mo Zone. Now, on the 5 minute, your zone Mo held beautifully. Yeah, thanks Daniel. Thanks for watching. Thanks for tuning in. Cool. All right, guys. Well, don't forget to like and subscribe, and I'll see you tomorrow for YouTube. All right. Catch you later.